Welcome to the Business Spotlight. My name is Jada Walker. I am your host for today's conversation, and my guest today is Paul Dowding. He is the co-founder of L4S Corp. We'll be talking about his business, the journey to business ownership, challenges, best practices, and share a peek of what it's really like to build and operate a business. So, Paul, thank you so much. Welcome to the show. Thank you for being here today. I'd love for you to share a little bit about your background of who you are and tell us a little bit about your business as well.
Okay, well, thank you, Jada, for having me. I'm excited to be part of the show. My background is I actually started life as a real engineer. My degree is in aeronautics and astronautics, and I went into manufacturing engineering with Ford back in the UK. But fairly quickly out of college, 3 years, I transitioned to what was then banking operations, back office of what was then Chase Manhattan Bank in London. And these are the back office, all the processing, and they were moving from paper-based to computers. The technology needed some production experience, and you're dealing with capacity, throughput, bottlenecks, some of the production terms. Or when you're processing transactions, even if they're done on computers, they still need to be controlled and managed.
Right.
During the management training program there, actually sent me around the world. So I worked here and obviously came over to the States. I lived and
All
worked
right.
in Singapore and Australia, and then I came back to the States. That's where I met my wife, and that's why I'm still here. But a career in what is really institutional financial operations and infrastructure, and I've done it from managing operations, sort of re-engineering them, or from a product management side where a product has an operational bias or a dependency, and then ultimately in strategy and innovation. So I've worked with some of the bigger banks, most people, some of the famous names like I said, Chase Manhattan Bank, Morgan Stanley, Goldman Sachs, Bank of America, BNY Mellon. I've also independently consulted or been subcontracted to Citibank and other big funds, hedge funds like Bridgewater and Graham Capital, and then in my last iteration, what was really the evolution of the business was I was at a boutique consultancy, and there I consulted with depositories and clearinghouses as well as banks and fund administrators. So I've seen the back offices of every type of business you can imagine in the financial services, and they asked me to look into what was then blockchain. So people maybe the ledger that backs the cryptocurrencies, was also trying to find a way to help the global financial services. And there was a real opportunity. I mean, for people who aren't aware, what Bitcoin showed was that you could think about when you transact, you go through an intermediary, and certainly there's usually a central authority that decides that, this is a correct transaction and I actually have the money to pay you, and the bank
Right.
clears the transaction through a clearinghouse or its own books and records. What Bitcoin did was said, oh, look, here's a network, and you can join the network and you can just transact with somebody else just by having what they call private and public keys. So you could transact peer to peer without a central authority. So, and also the settlement would be in hours, if not minutes. And it was just a fantastic concept, because we've been forever looking at the infrastructure and industry and saying, how do we make it more efficient? And this
Right.
type of ledger looked like it had that potential. What we saw though was, and there's been variations, if people know the names like Ethereum, or recently there's a new protocol called Solana. These are public
Mm-hmm.
blockchains that you can go and you can record so much more than just the transfer of an asset like Bitcoin. Having said that, they're distributed ledgers, so they're quote unquote ledgers, but they don't actually have accounting. They have this fundamental, a different way of recording the balances, which is okay for the crypto world because it's completely
Right.
unregulated and everything else. But if the bank said to you, I'm holding your money, but it's in something, but it depends on this mathematical proof, but I don't actually reconcile to it, I can't reconcile it, but it's there if you want it, maybe. Oh, by the way, if you enter into one of these DeFi protocols, your asset's gone. There's an algorithm that says you'll get it back sometime. but it may go poof and we don't know. You'd be like, hold on a second, what is this? So there's a lot of risk and uncertainty in the crypto DeFi world. But to translate the business to the financial world, you really need accounting. And believe it or not, the idea of a transacting period, which sounds alien because normally you have like starting balances, transaction, and ending balances, but these blockchains are continuous state change blocks. They don't have transacting periods. But worse, because they don't have accounting, they can't record payables and receivables. Meaning, think about it. If your credit card showed you how much you'd spent but couldn't tell you how much you owed, that's a payable, right?
Yeah.
Yeah. So there'd be something missing. If you had a car loan and it said, yeah, we know you gave you the car and you gave us all that money at we gave you that money but we can't actually project what you owe us on a ledger.
Yeah.
It's in an algorithm somewhere. It'll wake up one day and say, oh, you've got to pay this. So we saw like, hold on a second, this doesn't fit with financial reporting as well as compliance. Then there were some other things that we saw that could, if you're in the blockchain world, you'll often hear about capacity, scaling, and interoperability. And we saw those as fundamental. So rather than trying to build something that doesn't have them and add it, what ended up happening was I ended up designing what became our platform, Tapestry X. And that's a distributed ledger that actually has double entry accounting, has transacting periods that can be reconciled, has future data payable receivables. But better yet, and this is for the technical guys out there, you synchronize these networks with either consensus, meaning people come to an agreement, or there's independent validators that say what's right and wrong. Ours is able to synchronize without consensus or validators, so based on the transaction data alone. So again, you're going back to that pure form of what am I doing? Who am I doing it with? Can I record it and capture it, but on a secure accounting ledger? And that helps us with the scalability and capacity issues. And then we built a way, we knew we had to interoperate with legacy infrastructure because no one's going to take over the world in a day. So, so we built an interoperable interface. And in fact, and funny enough, the way we did it, we actually created the most popular asset right now is these things called stable coins, if you've heard of them. They're a little bit clunky. They have a utility, but we invented a simpler version of it without even realizing what we had. It was like, we just like, well, you're going to want to, transfer dollars. So why wouldn't you tokenize them and do it? So we had that mechanism. So anyway, long story short, and I've already been a bit long here.
Oh, you're okay.
The transition was to sort of say, we're in a boutique consultancy, we've got this idea. We need to actually create a venture to actually build it. And it was one thing to have a concept in a slideware. So over the last few years, we've raised the funds for individual investors to build the software. We've had a lot of interest. We've got some proof of concepts done in the industry. Unfortunately, they didn't move forward, but we're tracking sort of like 15 to 20 prospective clients right now. So we're still pre-revenue, but we've got such a differentiating offering. And if you look at the industry, the crypto DeFi world's doing well because that's unregulated and people are making money, and there's no way that technology in its form will be applicable to traditional finance. So you've got the crypto DeFi guys looking at the hundreds of trillions of assets in TradFi, we call traditional finance, and they're going, how do we get that? And they can't. And then the traditional guys are looking at this technology and going, how do we make it work? And they're trying to take square pegs. And if you look at the enterprise, if you're really honest and pragmatic, the enterprise blockchains that are out there have kind of done very simple use cases or limited scale implementations. Why? Because they don't have the accounting and functionality to do the whole use case or life cycles, or they have the capacity and scaling issue. And it's just a reality. So unfortunately, we're fighting a lot of shiny objects that are distracting people. But we're on the cusp of, once we go live, we know we don't have to necessarily explain what we do and how we do it. People are just going to be happy that we do. And that's, unfortunately, that's the reality of the world. We need that one early adopter that's going to say, okay, let's go. And then after that, if you know the crossing the chasm, like there's the early adopters, but they tend to be small and limited. And then there's a chasm between them and the early majority. And the chicken and egg situation with the early majority is no one wants to be first, which if you think about it, that's an unsolvable problem. but if you convince one of them over the fence, then all the others follow, and that's what we're hoping for. So anyway, that's the
Yeah, no,
background, and then that's my story.
no, I like that because I've dipped into the crypto world before. I had no idea what I was doing. So to
Well,
learn a little
hopefully
bit
you held
more
on to
about
it because it'll be worth a lot more if you did it a while ago.
I didn't. I should
Oh,
have. I didn't. I should have.
okay. Don't
Because
worry.
I was in there and I didn't know, I really had no idea what I was doing. I was losing money. So I was just like, I don't know what to do. So
Mm.
yeah, I just gave up on it.
The funny thing is like again, they're reinventing the traditional world because technically it was built for individuals. Like I
Yeah.
come in, I do it, but now you've got, and obviously probably you did it through a crypto custodian, but think about it, that's an
Mhm.
intermediary. Now the network itself is decentralized, but you're going through intermediaries, and they're kind of reinventing, but they're doing it one use case at a time, and they're recreating the same infrastructure that we have, and they're talking about layer twos to work with everything. And I'm saying, well, really, if you look at if you deal with international investment, anytime you're touching a new product in a new region, it's a whole new infrastructure. And really, what the big banks and brokers are is that layer above that connects you to all those infrastructures. So when you buy a mutual
Mhm.
fund that say buys a share in Australia, it's the bank going through an investment manager going through a bank that's connected to the Australian market, right? They're just
Mhm.
connecting you to but now they've got all these little crypto things and they're trying to put a layer above it to get them to talk to each other. And I'm like, you're recreating the problem that we were trying to solve for. So,
Right.
but
It's
having
like
said
slow
that,
down.
there's a lot of money out there that, and again, it's a risky business because it's you really have to know what you're doing. You hear about there's
Yeah.
obvious scams and hacks, and some of this code can be hacked.
Mhm.
But it is buyer beware because you're not protected by any regulations or
Exactly.
real intermediaries. Maybe the crypto custodians to a certain extent, but once you start going into the what they call the DeFi, if you're lending your crypto or doing anything else, you're in a completely it's your risk completely. No one's backing you. So that's where it's great if you can make money, but know what the risks are.
Yeah. I just think I needed to learn more
Mm,
before I started doing what I was doing. It was like I was
yeah.
just playing a game. Like that's how I was treating
But
it.
the thing with the real financial industry is all we're doing is making everything. It's a like I said, every product needs its own infrastructure. So while you
Mhm.
can consolidate records, you still need to have multiple positions. The distributed ledger doesn't care what you have, so it becomes one ledger for all assets. And if even if you have different networks, you're in the same format or same, and that's what makes it universal. So now, and then without getting into details, but the technology allows transactions to be faster, cheaper, and you start to open up possibilities. I mean, most people know if you've got a brokerage account and you buy shares of IBM, right? You own them as of today, but it actually doesn't settle until tomorrow. And that latency introduces market risk and counterparty risk inside the network. If you can settle intraday, you create more efficiency and there's less balance sheet requirements for the brokers, and
Mhm.
it's cheaper for the fund managers to manage. Therefore, they're either increasing the returns, or discounting the cost. So a lot of investments are available to private wealth people, and but they cost a lot of money, so they need to have a big entry point. Yeah. But if this
Mhm.
infrastructure makes everything cheaper, it's actually making different investments accessible to retail clients. So, and then you talk about banking the unbanked and everything else. The reason it's so hard is because the infrastructure has a cost of entry. So you can't do small payments.
Yeah.
You can't do. Whereas if you've got a cheap infrastructure, suddenly those possibilities are there, and so it really has a way of simplifying the financial industry. So for consumers, you're not going to know about it. It's just going to happen. It's like the internet. Think of the internet, and you may be pre-internet, right? You could send an email to within your company, but it couldn't go outside. You could do a video call like we're doing, but you had to
Mhm.
literally set up a dedicated line and call it up and get it all synchronized with the machines. And you couldn't just
Yeah.
invite 100 people because that would be 100 call in. It was like
Right.
Whereas the internet, what it really did was said, if you use the same protocol, you can email anywhere. If you use the same voice over internet protocol, you can call anywhere. If you use the same video over internet, you can use the same video. So suddenly it's like, where am I? Where are you? Click, and we're communicating. All right. Think about the infrastructure that used to be, but it's just a decentralized network of networks. So the real potential with this technology is a network of networks. Where am I? Where are you? And we want to transact.
Yeah, it's funny because like I've never even really thought of it like that. Like I've never thought of it like that.
Well, think of how many apps you have on your phone for every different type of transaction you do. Now imagine you just had to say who I want to transact with and what am I transacting. That's the real potential. So it's simplified, but it starts to, what the internet did is commoditize communication. And so what became prevalent was content or services or applications. No one could have imagined social media before the internet, because it'd be like, how are we going to do this? How are we going to link all the computers so anyone can talk to anybody and leave a post and pictures and go, Amazon, and actually I make the point, this technology is going to be so revolutionary, we can't imagine what it's going to do. But here's the analogy. If you went back into the mid-late 90s and went to every major telephone company, right? I'm talking about the Verizons, the AT&T, and said, in 25 years, your main competition is going to be that nascent online bookseller called Amazon and that DVD delivery service called Netflix. A telephone company would have looked at you and go, what? How are they going to be my competition? Well, the internet commoditized communication, and that's when the telephone companies started buying cable companies, because what was important? Yes, we want some phones and connectivity, but we want content. And Amazon and Netflix, through their different ways, came into the content business. So what I'm saying is transactions will be commoditized. So who are the people with the networks? Well, yeah, the banks to a certain extent, but the Walmarts, the Verizons, the phone companies, or the content companies, I should call them now, the Googles, the Facebooks, they all have natural networks. So if they have a banking license, they can suddenly do all these transactions financially for you. And they'll probably be better at it, and they don't have the legacy infrastructure to get rid of. So while I tell the banks, you've got a chance to get to a better place, but don't get too, happy, because
don't get too wild.
because the technology is going to change the landscape. So it's really exciting, but we just got to convince a few people to buy our platform, and then we'll be off to the races.
Yeah. Okay. So to set the stage for the viewers, generally speaking, since you're a co-founder, what does your current ownership structure look like?
So we've got we've been fortunate in the sense that we've been able to raise the money primarily from our individuals, our network from the founders. So we only have really at this point individual investors. We have gone through the path of looking at a next raise with some investment bankers and angel funds, as well as potentially VCs. But there's different entry points required for them, and they're also, at the time, blockchain has gone through a few ups and downs as far as its reputation. So we started looking when it looked like it was on a peak, but it was on a downturn. And then a lot of people were looking at AI early on. So again, it's like, where's the investor focus? And you kind of have to be in the right product at the right time. But we've still been able to manage to fund. But we've also, in our industry, we're dealing with big technology companies, big consulting companies, and big banks. And many of them have said once we're up and running, they want to be a strategic investor. So we believe once we've got clients, we're at the next level. We're revenue positive, and there's a different valuation for that. And then the next thing is just really the sort of kind of strategic landing. So we've got a plan in terms of how we can grow our business and meet the requirements, but we're just trying to break out right now. And we know we've got interest. I say it's scary that I have to make it, although I've got the technological thing, like I said, I can synchronize without consensus or validators and do all the geeky stuff. The amazing thing is we are the only blockchain or distributed ledger that actually has double entry accounting. So we're configurable to the terms and formats that banks and brokers use today to transact. They use accounting. And it's not me being, a little bit fussy or pedantic. It's been around since the Renaissance. It's legally required. Think of any business. You have to report your financials in accounting format. So why would you want a ledger with any of your other assets in some other format that's difficult to reconcile to or track definitively? And that's the truth. So unfortunately, we're a ledger that differentiates. Imagine QuickBooks saying, we're the only accounting system that has accounting. You'd be like, what? No. Why wouldn't the other accounting systems have accounting? But yeah, that's where we are. As amazing as it sounds, we're differentiating ourselves by being a ledger with accounting.
Well, good. At least you stand out from the competition. At least you stand out from the competition.
Well, this is like saying, well, we've got a car with round wheels. We've got a car with a steering wheel that you can actually turn. It's like it's so fundamental. And excuse me, but that's why although they've got our competition is able to do a certain amount to a limited extent, but they can't go any further. And it's amazing, what they've been happy with to get the first step. But I blame it on incrementalism. If all you do is, I've taken my first step, don't worry, Mount Everest is just a few more away. It's like if you're going one step at a time, you're potentially not planning for the next thing. Whereas we stepped back and said, holistically, what are all the things that we have to put in place? We have to be generic and flexible. We have to be scalable and high capacity. We have to have the financing functionality. So before we'd finished any of the design, we'd laid out the roadmap. Whereas if all you're thinking about is, I've just got to record a transfer, great. And then it's like, but you forgot, if you'd been thinking about the future, you'd have said, hold on a second, we need future dated periods. Oh, we need double entry accounting. Without that, the incrementalism has stifled the industry.
Yeah, that's interesting. Because I would have never thought of any of these things. But let's get to the nitty gritty of your business itself, and let's take a look into your background a bit and what led you here. So why did you choose to go into business for yourself as opposed to choosing to work for someone else?
My first experience of it was in the financial services. It goes through ebbs and flows, and through no fault of your own performance, you can be deemed superfluous to requirements. So you can be laid off, and it's like where there's and I've been in the management position. In fact, the first time it happened to me was I'm on a list, and they said, can you give us 2 lists? How many people do we lay off if we cut 5%? How many people do we lay off if we cut 10%? And I would recently join this institution within the year. So I'm like doing my work and saying, well, this is what I would do. And oh gosh, it's horrible. And you've got to plan. And, these are real people's lives. I mean, obviously there's services and, retention, other pay, compensation for people to try and help them through the transition. But you're thinking about it. But I'm on the way home on the train. I'm like, hold on a second. I'm probably on the list from above me.
You're like, okay, name on there.
I don't want to be cavalier about it, but it's often it's somewhat political in terms of there's people that want their people or whatever, or it can be just a matter of, like I said, once you get to a senior rank, you're a larger expense, so you're an easy target. And so from that, I set up my own consulting company just as an LLC, so that I could consult, and all I was trying to do was bridge the gap. And at the time, I was involved with a consulting company, and there was an idea of a startup company, but it never really progressed. But it gave me a sense of what it was to be independent. And as I joke, between my full-time sabbaticals, I had the mechanism to re-engage on a consultative basis that usually ended up leading to a full-time role, or I was gaining different experiences. So what it helped me do was, by sort of happenstances, I ended up working in a whole different set of places. Whereas normally in a career, you're in one special function. It's very rare that you move too many functions over. But with some of the transitions I'd made with my work changing, being hired by other people, but my consulting led me into different businesses. So I ended up getting a different business. So, and as I said, it wasn't a deliberate decision when we created the concept of what became Tapestry X in the boutique consultancy. The investor advisors within the consultancy said, it looks like a different sort of IP that we want to build a business around. And so one of the key things I'd emphasize to everybody is if you're thinking about this, you have to have a good team. And, we've got, to a T, many of our board members are involved in the business, the industry at senior levels with operational infrastructure. So they not only understand the technology, but they understand the business opportunity. And then you need their support to get investors, to bring the opportunities in terms of clients. And I can do a technical sale, but I'm not perfect to grab the client, deal sale. But so you need other people. If you're dealing with designs, we need, we're sounding boards for each other,
Right.
and even if it's just, our board is pretty active in terms of we meet once a week and we want to garner the input, and like, where are we going? What's the target audience? We participated in the industry in social media. And you've got to kind of I put myself out there quite a bit on LinkedIn. But that's, like I said, it wasn't a deliberate decision, but it kind of, if you look at the history, the sort of, my wife will say the planets aligned with my experiences, with the technology, with the ideas. And it led to something that people then believed should be developed. We're just, on the cusp of it being, implemented.
That's cool. So as you look back on your journey so far, what has been the most memorable roadblock or hurdle that you were challenged with and you were forced to overcome?
We're still trying to overcome it. The big challenge is the shiny objects. All right. And like I said, bit of incrementalism and what's the latest trend. So if you were involved in the crypto, it's like, are you just are you buying Bitcoin? Are you buying Ether? That seemed to be, there was only two choices or whatever. But then it was like everybody was doing an initial coin offering, and I was getting offers. I'm like, I understand the securities industry. That looks completely dubious. It's like it might work for crypto land because the people getting the money there. And there was even a case where literally someone set up. They're famously written up in Wired magazine. They just had an idea, and they got 400 million through a coin offering. And then they're like, what do we do with all this money? And then there was all this scandal, different things going on. But the coin offerings. Then there was NFTs, non-fungible tokens, like the images. Now, what people didn't realize at the time is you weren't buying the image. They take a hash of it, create a mathematical number, and your public key could point to that number, literally a number in a distributed ledger. And that's what you're going to pay $1 million for? But NFTs went through their cycles. Then it was like, now crypto and DeFi has kind of taken off and it's got its own maturity, but it's got its risk. But again, the latest thing is stable coins. So they were invented because the cryptos are so volatile that they wanted, and they wanted something that was stable that they could put as collateral or they could, interchange. But what they found was, well, hold on a second, I can go from Bitcoin, I can put it into stable coin, then I can give it to you, and then you can put it into it. So it's a cross crypto mechanism or a cross currency going from dollars to euros. But you're doing it in 2 or 3 hops. But that's it. It's a pre-funded cross-currency transfer. So it has utility. I won't go into details, but people are making a lot of money whether they issue them, the users are getting a faster product, and the people who hold the stable coins are betting them in the casino of DeFi. So everyone's making money, but it's like the whole industry is like saying, I want to do stable coins. And I ask why? Because unless you're doing that cross crypto or cross currency transfer, that's it. That's all. You can't lend and borrow stable coins outside of DeFi again, which is the again crazy crypto world. You can't do it like a bank. And I'm sitting there going, it's a digital debit card. If you get a pre-funded card that you can swipe and spend all the money on, great. Well, if you're just doing that digitally, it has a use, but it's not replacing the banking industry. And yet everybody. So occasionally what we've got is this challenge is dealing with, hey guys, if you had an optimal ledger, wouldn't this be what you want to do? And they kind of go, yes, but look at what I'm doing right now. I'm like,
Yeah.
I'm recording. Again, people have said I've tokenized an asset, and I'm going, well, that's great, but now it has a life cycle. If it's a share, it pays a dividend. If it's a bond, it pays interest, or it matures, or it converts. How are you doing that? And they go, we haven't got there yet. So I'm like, okay. Again, there's real examples of people have said there's digital money market funds. Now you would expect if you're buying a digital money market funds, you're buying digital assets. No, they're recreating the subscription redemptions of a transfer agent. Transfer agent controls who owns the shares of a fund, right? And they say who it is because when the fund pays dividends, they've got to know who owns it, right? Now that may be through your brokerage account or custodian, but it's a secondary layer. They just recreated those records on a blockchain redundantly, just to say it's digital. But everything else, the transfer agent, the assets, the money, everything else is done on traditional legacy. So when they're saying they're doing it, as a digital fund, they're really saying I've created an additional expense and I'm recording it in parallel for the sake of saying it's digital, but it's not really a digital infrastructure. But again, it's a challenge in terms of when you're in a new industry, when you're a new form of technology, you have that challenge of crossing the chasm because you've got to get the early adopter to get the early majority, and that's what we're still, I literally have people say to me, and I'm going to come back to this, counting, do you really think it's necessary? I'm like, so now
you're like, yes, it's very important.
now the Bitcoin maximalists, and I've met a few, is right, because he came to me and goes, really, accounting, that's going to be the differentiator? And I said, how much did you pay your CPA to work out your crypto tax bill this year? He goes, oh, it's like, and I said, yeah, because they're not ledgers. So how do you extract the tax consequences of this crazy different? It's a different type of ledger. It's a form of ledger, but it's not double entry accounting. Whereas if you know double entry accounting, you can do unrealized gains and losses. You can do asset lot accounting, and everything. If you've got the accounting, it's like feed it into a tax thing and it's done. Whereas if you haven't got accounting, you're sort of saying how. And I know forensic accountants that are literally going to all these public blockchains and saying, if you've done this, that's where that information is. This is the source, but you've got to calculate it. And this we don't have anywhere at all. They're literally mapping, how do I interpret this data? And I'm sitting there going, why are you translating it into like Swahili to then translate it back? Why don't you just do it in accounting and then get it back? And again, as obvious as that seems, and anybody who's listening, that's the truth. That's the reality.
Yeah, because I'm like, I feel like doing it the other way, you're just making everything so much more difficult for yourself. It's like, just do it.
Well, if you were sending a document to somebody and they can speak and read English, but you said, but the way we're trying to transfer it is we're going to translate it into Russian and then send it to you, and then you're going to translate it in Russian back to English, you'd be like, is that efficient?
Right, like why'd you do, like, what? It's like, what was the point of that?
Now, the point is the influence is the original Bitcoin model, which, because it's built for individuals, it says, I have it, now you have it. That's actually single entry accounting, right?
Okay.
But when you do double entry accounting, there's multiple layers in double entry accounting, but really you're saying, I debit Alice and I credit the ledger. So now the ledger knows all the equal and opposite of the accounts. Now I debit the ledger and I credit Bob. So now you've got both parties and the second entry. Now that's a gross simplification. In the banking world, they have then, where is the money held? The money may be held in a clearinghouse. So if you're going bank to bank, you've got a ledger on the bank for the client accounts, and then you've got a ledger on the clearinghouse, which is where does the money move between institutions. So we set up our nodes in our network like a correspondent banking network. So the accounting follows the banks come along and they look at it and go, this is what we're used to. So it doesn't look any different. And that's that again, why that's a differentiator. It shouldn't be, we should be differentiating on our capacity, our scaling, and our interoperability, not the fact that we actually a ledger with accounting. But there we go.
No, I get it. So let's move on to what makes your business so special. So who primarily does your business serve? Like if I was in the audience and looks like someone's a little confused, how would I know that I'm a good fit for your service?
Sure.
Or
So what I said was a distributed ledger like Bitcoin has two use cases. The famous one, which is Bitcoin, which is now I can do peer-to-peer transactions or B2B transactions without necessarily a central authority, but I can do it securely and everything else. So that's it. But the reason it works is because each of the nodes has a copy of the ledger, their copy of what's true, so that I can't process a transaction without me validating my copy of the ledger says it's good. The consequence of that is that there's ledgers that are being synchronized. They're all got the same answer, right? So that has a benefit because many times in companies, they have multiple ledgers that have to interact with each other, and they're constantly reconciling to find out, am I in sync with you? So one of the interesting use cases is in the global banks or the big institutions or the supply chains or the CRM implementations, where they've got multiple ledgers, we can act as a middleware to get everybody synced. So if someone's done something, they, all the people that are supposed to can see what's happened. But it's a way of synchronizing. So I'm just saying that because we've got to have a natural network of either synchronized ledgers, which is in the fund management industry, the private fund industry. If you're looking to do simplify or automate private investment funds or massive mutual funds, there's a way to help make them more efficient. The obvious one is the transacting network. So yes, we can work with clearing houses because they're acting as a means of clearance, but now they can do it distributed. We can also go to the exchanges because they're executing transactions but relying on other infrastructure to settle. So they can go. There's actually a competition when you look at the financial services. You go from the very exchanges where things are traded to where they're settled to cleared and depositories, and then even, like I said, the transfer agents who decide, who owns the share. So when you own IBM, you get dividends. The only reason is because the transfer agent knows you've got it at this custodian for your account. They know it indirectly, but there's all this infrastructure. So if you've got a natural network, either as an exchange or depository, or big international companies move money between all their divisions, that's a money transfer business that we can help simplify. We're talking to community banks. Why? Because you pay an additional 3% on every credit card transaction. But in community banks, you live in the area, and the chances are the businesses that you spend your money in live in the area. Why do you have to pay 3% for every transaction when you could actually have a distributed ledger in the community to create a real-time settlement? Now, if you swipe your card, the merchant doesn't get the money for a day or two. Imagine if you swipe the card and they got it immediately and it didn't have the 3% charge on it. So there's those payment networks. So, but as far as our clients are concerned, as well as being the institutions, the software companies that provide the solutions for those institutions want us. So the banks are the ultimate client, but we're going in on the back of a software company. But selling ledger solutions today, but selling distributed ledger solutions tomorrow. Even the big consulting companies, the cloud companies, we've got a partnership with IBM on their sellers. We're on their website. We're working on some other ones. We've got some other bigger consultancies who want to be our implementation partners. So again, there's the ultimate users of the technology, but they may come through a third party, and those third parties can be our clients as well. So it's again, we're talking about a universal ledger that can be used in multiple use cases. So it's like I said, if you've got a natural transacting network, if you've got a natural network of ledgers that you're constantly reconciling to, the chances are this technology will help you. But again, I'm saying that generically. I've said specifically who the roles are, but generically, I'm just forget about what your role is. You've got a transacting network that you help facilitate or sponsor internally or externally. if you've got ledgers that you're trying to synchronize, then that's where we can help.
Thank you for wow, I can't speak. That's how you know it's Monday. Thank you for specifying. Like my words are not coming out well.
Yeah.
So
Well,
what is
I
one?
think you try and if you express things generically, then it becomes universally applicable, and then you can then focus in. The problem is if you go specialized, then you've then got specialized everything else. Whereas if you pull back
Yeah.
and say, and I hate to say it, and it sounds obvious when you do, but ultimately accounting is just debits and credits. It's not that hard. It's just how many types of debits and credits you have. So if you go into the transactions and you're looking at a specific transaction, you're not thinking of the debits and credits. You're thinking about what am I doing? And then when you say, well, there's a different transaction, you've got to think about, well, what am I doing? And then how do I interpret it? Whereas if you go back to the fundamentals, you can actually say, how can everything be expressed in the same way? As much as, and I tell my kids this, although they hate this, but, but you know, everything we're doing on this computer is ones and zeros about that. And that's what Boolean logic, like if and NOR gates, NAND gate, they're all basic things, but it's just that the computers can process those ones and zeros so fast that we've got a video here going, but it's literally ones and zeros. So accounting is just debits and credits. So if you go from that fundamental, you can create amazing things. But if you start at the complex layer, you're now wrestling with complexity before you can apply it to other people, and that's a just a different. So I've always tried to sort of say things in their fundamental things, which may resonate with you. Like I said, if you're a bookkeeper in a small business, okay, but that's that. What if you're the bookkeeper in the bank? What if you're the bookkeeper in the tax attorney? Like they've all got different books. Whereas if you talk about the accounting in general terms, they all go, oh, look, that actually applies to me. Any business can use Intuit QuickBooks.
Yeah.
They don't care what your business you are. But if you went to a specific solution, there might be some special transactions you need, but you really want to start with the fundamentals.
Yeah. Okay. So what is one thing that you wish more people knew about your business?
I wish they knew, again, this is all part of our advertising and our social media and our constant berating, but I wish people recognized the real difference, because if they did, they should be, running to knock down the door. But again, that's the challenge. Again, I'll come back to it. People have to understand blockchain concepts.
Yeah.
And then they have to understand why we're different. So we've actually, initially we were emphasizing the blockchain stuff, but then we realized that we're fighting a sort of, an academic limited population cell, right? Whereas if we turn around and say, we can do double entry accounting, we have reconcilable transacting periods, and we can record future dated obligations on chain. So when you do a loan, you've got future dated payments. You have to do that on chain. The other blockchains cannot do that. Now that becomes, so, but again, it's like, as much as we say it, it's like they're distracted by what they can do. It's like this, if you've got a car with a stuck steering wheel, you can go backwards and forwards a lot, and you can pat yourself on the back and say, I've created motion. Yeah, but that corner thing, that's going to be a bit tricky. Yeah, it is actually, but we're working on it. And it's, and again, if you don't think about it, that means you've got a car with no steering wheel. So you've got this ability to go backwards and forwards, and you can't turn. Think about a train. A train is actually a device that really can't turn. It just follows the rails.
Right.
But it was the motor car or the horse's carriage, even a horse carriage. It's like, now I've got something I can steer so I can go anywhere I want, right? So I'm just trying to say, if you think about things in simple terms, it's like you can praise yourself for what you're doing, but really, what is it you want to do? So I wish people understood both the accounting differential and as well as the technological differences.
Yeah, I feel like I wish whenever we were in school, they would teach you these things. Like, I mean, like in high school, because I feel like that's whenever I would have actually retained the information. When I went to college, none of that stuck. But I'm like, stuff like this, I feel should have been taught in school so that later in life, we actually know what's going on and we can actually speak to certain people about it.
Yeah,
Because
I think,
that
I
would
mean,
just be way more helpful.
as an engineer, you're off. It's funny because I attribute, one of my high school chemistry teachers, whenever you did the you were always deriving things from first principles and building up.
Hmm.
And a lot of engineering and a lot of math is, fundamental axioms that then build into other things. Now, they're
Yeah.
not they're provably not the be all and answer to everything, but there's certainly a lot of usefulness in it. But that was ingrained in me for a long time, and even in ultimately, blockchain is not a technological solution, it's an operational
Mm.
process solution. And so
Mm.
what you need
Okay.
to do is, if you're doing any operational process, you workflow it and you map it out before you build or code anything, because otherwise you've got a potential logical inconsistency or a roadblock or a bottleneck. You've got to plan it out and design it. And that's often today with so much code, people are happy to code something and then find out what's wrong and then see if you can fix it, as opposed to
Yeah.
truly design it from scratch, which is,
Yeah.
somewhat of a lost art.
Yeah. No, I totally get it. But this is actually going to lead me into marketing because I know you had mentioned it a couple of times, and I always feel that it's vital for every business out there, of course, um, but it's also forgotten. So I am curious what successful business owners are doing. What percentage of your monthly, wow, can't, my brain's not working. What percentage of your monthly sales is typically invested back into your marketing budget?
Well,
Goodness, my.
we have a plan for that, when we're
Hmm.
revenue positive. I mean, we had a couple of like proof of concept implementations, so we've generated revenue, but we have a plan. But it is a very tough thing because it's a little bit of a mystery in the sense that, and again, I'm not a marketer, but I would lean heavily on
Hmm.
marketing, and I've seen successful marketers, but I've also seen, snake oil salesmen say, "Oh, I can do this, and we're going to have your brand there, and blah blah blah."
Right? Yeah.
It's amazing how many people come to me with, "I can improve your SEO," and I'm like, that's the last thing I need, because we're selling to institutional clients. We're not looking for clicks on Google,
Right.
they haven't actually looked at the business model. So the only thing we can do, and I say this to all the people that say, have I got a great system for you? You'll have so many leads, you'll generate your business 5x. And I go, are you confident in your system? They go, yes. Okay, we'll pay you when we get paid. And they go, oh, but we have expenses. Well, you're so confident that you can't. And I said, so we have to do it on a contingent reward basis. And that usually settles the wheat for the chaff, because we've got a couple of people working with us who said, yes, I'll sign a revenue share agreement so I can spend all the time and money and effort for what I want, but I'm only going to get rewarded if you actually win business. And that sort of separates the wheat from the chaff. But having said that, um, I've seen, marketing in terms of polish, in terms of presentation. At the moment, we've actually been pretty successful. At LinkedIn, I started posting, and then I saw from the influencers, you need to get onto video. And I was like, oh, like no one, so you know,
I feel like I have
and
to come out of my shell. What?
but then I found they got a quick offer for that, like whiteboard software where you could actually do
Hmm.
drawings, and it's like a little PowerPoint except it's on a whiteboard, but you could actually record your voice. So I'm like, okay, it's just me speaking now, but I've got all these animated. So I did that, but it kept on saying you have to get in front of the camera, because people will know
Yeah.
you're real. So my first one was, horrible. I tried, but over time I got better at it. And also, what's interesting, and people saying this now, is that if you're genuine and authentic, you're not worried that you trip over a word or you get something wrong. You have to, oh no, what I really meant was this, but blah blah blah. This is what's in.
Hmm.
You, compared to the polished, corporate videos, you come across as someone who's worth listening to. And again, if you've solved a problem, if you're really highlighting a real issue, and you keep it within that, 2 to 3 minutes, people are like, oh, it's you. He's worth listening to. And the amount of
Yeah.
people just come up to me and go, I've seen you on LinkedIn. I'm like, I don't know you've seen me unless you like me or share me. So please,
Right.
I'll do that. I'll do. I'm like, no, but people forget. Like, I don't know who. I've got 100, 1,000 impressions, but I have no clue. And but that's actually it's funny. The social media. I mean, I'm on LinkedIn. The others, Instagram or TikTok are more consumer based, not institutional. Although
Yeah.
we could argue.
Yeah.
But the best thing is you post something and you save the link. Because I try
Mhm.
and keep my posts rather timeless, and there's certain things that are specific and maybe relevant to a time or specific. But if you can say this is a way of looking at scalability and it's generic, then I can repost it or I can comment on someone saying, well, have you thought about this? And you can start to create this web. And the thing I forget is to then thank everybody that engages with my content and reach out to them and say, is there, I saw you liked it. Is there anything you're doing that's doing it? And that's actually where a huge amount of our pipeline, what I'm talking about in terms of our prospective clients, have actually come through a connection or an affirmation through social media. So and again, as a outside of the time and effort, it's fundamentally free. There's other things you can spend money on boosting it and other things, but we don't do that. And again, I've got thousands of followers and I get different influence, and again, it becomes a catalog of collateral which you can
Yeah.
reference. So by the time people come and say, "Hey, I'm interested," they're not just seeing you as the new shiny thing. They're saying, "Okay, you've had a history. You've been working with this for a while, or you've got lots of different things that you've got an interesting perspective."
Yeah.
So that's definitely an area where I for the return on the investment, it's like blood, sweat, and tears versus dollars. And we're like I said, quite a few of our prospects that could be quite lucrative are going to come from those efforts.
Yeah, I like how you brought up LinkedIn. I actually, one of my other interviews from last week, he was talking about how he's been really into LinkedIn, and I guess he grew his following to like 9,000 people on LinkedIn. And I was just like, how do you do that? I feel like I only have like two people following me. Not like it really matters to me, but yeah, I was just like, that's crazy that LinkedIn is basically being used like, I guess, how I
Yeah,
use Instagram or like Facebook.
yeah, and even I've got other people like if you create an event, you can then
Hmm.
share it with your network,
Yeah.
a thousand per week, so you can get messages out pretty quickly. But I've got a little under 4,000 followers and I've got over 500 plus connections. So I'm not as
That is
big as
so crazy.
some of the influencers. But again, I'm not looking to hit, I really want to hit the
Right.
focus people. And that's the other thing is that you can sort people by title, by name. And again, the interaction, if you get the interaction, then you've got the excuse. And usually, if there's a lot of people, I don't know why, but they send me direct messages like, "Hey, I saw you," blah blah. But it looks canned, and unfortunately, when I don't know if LinkedIn had a middle initial field, but I put
Hmm.
Paul. My middle name's Frederick, but I put Paul F. Dowding. I usually sign it F, so I'm somewhat different. But they didn't have a middle initial, so my first name is Paul space F period, right? So if someone
Hmm.
just reads the name, I get these messages saying, "Hey, Paul F, I saw your." I said, "Well, you obviously generated that through an algorithm. Not that's not a person." Now the people who say, "Hey, Paul, I saw you," I'm like, "You are real because you didn't use. You must have typed that yourself."
Yeah.
So actually indirectly act as a filter. But I normally go back to people and say, "Thank you for connecting. Before I do, what do you want to discuss an initiative?" And engage them. And maybe now people come back and say, "No, nothing really." I'm like, "Okay, so I'm not connecting with you." Or
You're like, well, thanks
people,
for the 2 minute conversation. If
or
that.
people get upset and they're like, "Well, why are you not just accepting it?" Why would I? And I'm like, "Sorry, didn't mean to rustle your feathers, but goodbye." Block. It's like,
Like,
but
oh, yeah, I
it's
definitely don't
funny.
want to talk to you now.
No, I know. But the funny thing is, if you reach out with a genuine message, and again, if someone says, "No, I thought this, but I had this issue," blah blah blah, they'll talk to you about it. You can have a conversation. You don't necessarily need to connect, but you
Right.
can, again, because like having the other trick I'd say to people, and I've learned this the hard way, is when you do connect with someone, send them a message and say, thank you. It was great to meet you at this event and we discussed this topic. It was so blah, blah, blah. Because 2 years from now, that person will reach out to you. And if you go to message them, your 2-year-old message is there as an aid memoir.
Yeah.
Whereas too
And then
many
you're like,
times,
oh,
yeah, whereas too many times I've linked with somebody and then 2 years later, I'm like, what was that? Where did that person come from? But
mm-hmm.
again, it's like, yeah, again, that's where I've become more selective in terms of who I actually connect with. Like, I want it to be a relationship that's going to be a business associate or someone who's useful. And remember, you can follow people without connecting to them, so you still
Yeah.
see, again, it's just a way of, things. But it's an interesting, and there's a couple of I've never used their services, but there's a couple of marketers out there that post videos about posting videos on LinkedIn. So they're a great source of, and there's a couple of guys in the UK that put out these hilarious videos, and a couple of brothers, and then there's other people. They keep up with the trends, and you follow them, and then you can, one day I'd love to repay them by engaging their services, but right now we're focused on winning the business, not. Again, I've created I've tried different content, and I've even tried the
Yeah.
humorous side, so it's funny. It's funny. It's an interesting outlet. Like, again, pre-internet could never been imagined.
Oh yeah, no. It's funny because I'm gonna be able to tell my daughter that I was born before internet because I'm 29. So
Ah,
she's gonna be like, "What?" Yes, it's gonna be funny whenever I can tell her that and she actually
I
understands.
was born before the personal computers, and that's my claim. But my again, it's like my introduction to high school. We had one Commodore 64. That was it. So that's where I learned how to
Just
program.
one?
That's where I learned how to program in BASIC.
Oh
And it's
my gosh.
yeah,
That's so
because
funny.
they
Me and my boyfriend were just talking. I said that whenever we were at one of my schools, we it was what grade was it? I think it was first grade. We had like some laptops that would get like rolled into our classroom, and like we would just use them for I think it was 30 minutes to an hour just to learn how to type. Blah blah blah. I think they were one of the first laptops made, and it was the ones with like the little red button in the middle
yeah,
of
yeah,
the
yeah,
keyboard. Those
yeah.
ones. And he was like, "No, we never had laptops at my school. We just had the computer lab."
Big
And I was like, well,
lumps. Like,
at least you have the computer lab still, like, but it
oh
was
gosh.
just so funny how different we grew up. It was just, and we're the same age. So that's what I was like, that doesn't make any sense to me, but whatever. We went to
Okay.
different schools, but it's so funny. But of course, let's get back to this. So I feel it's important to address the topic of building a great team. So how would you describe your leadership style in business, and has it changed over the years?
Uh, well, it's certainly. I mean, there's just three of us that are sort of active in the company. We've got the CEO, I'm head of design, and then we've got a guy, Will, who's been there almost from the beginning. Helping us obviously with the product development and testing, and then ultimately we want him to sort of take charge of deployments. Where we need to configure
Oh,
with our
cool.
clients. So this, if anything, I'm a little worried, if I'm being honest, is like I've been away from management. I've just been managing myself and marketing.
Mm-hmm.
Whereas I've had run divisions where you've got managers managing managers and other people. But the key thing for me in terms of the building the team is, if you've any influence, you can recruit the right people, and not necessarily, you don't want rinse and repeat agents. You want people who can
Mm-hmm.
have a knowledge and expertise but can apply it to different things. And there's different roles. You need someone who's a bit more pedantic and fussy when you're dealing with financials, as opposed to someone who's creative in the innovation side.
Yeah.
But the other side is to recognize everyone's contribution. But as a team of managers, and even if I've got a like disparate group, to bring them together. So, because even if they've got a level of expertise in their particular areas, someone has a different perspective, or just an alternative question. So to bring the group together, not necessarily, I don't give up some autocratic control, but you can have decisions made by some consensus within the group, and the team then becomes stronger because they tend to act as a group, and therefore, and work more dynamically. And again, I think often people are looking for opportunities to learn more, increase their value, and you can challenge them. But again, it's a matter of having that realistic perspective in terms of what people's skill set is to do things and in different roles. And so as a manager, as that leading it. The other side of it is, again, that's me saying I've got my own team. But as CEO, it was like he was a former colleague, former manager of mine from Morgan Stanley, and we knew he'd just resigned. And my chairman was one of the more senior executives in the company, and that's who my boss had worked for. So I said, this guy's retiring. Can we get him? He'd be a great CEO because, like, to be a CEO, like everyone thinks I'm a founder, I should be the CEO and everything else. I'm like, there's a different skill set to that, and there's
like some people just don't want to do that, and
there's
that's good for them.
different responsibilities. And what what I was focused on was I've seen technology projects wander and get away from or be compromised, and so I that was what was my focus. I want to make sure there's a pureness to this design, and there's integrity, and it could easily be corrupted, and so that's what I wanted to be able to protect. But it was funny but it's recognizing, and we've had different people come in and say, "Oh, we can help you sell," and I tell them this is really hard, and this is try, and we can only give contingent rewards, and they try their best and they move on, But again, that especially in a business like this, and we've got to consciously think of it as we grow, we've now got to recruit people into something that's transforming from a startup to a mature business. So you need people who can adapt, to that transition and also grow with it, or if they can't grow, that their role is still relevant, And again, there's no right answer here, but that's some of the dynamics I definitely, I'm looking forward to having that problem, dealing with the growth. The other side of it as well is we want to license our software. We know we're going to be involved, deeply with some of the first implementations. But one of the reasons we have the relationship with the software companies and the consultancies is they're going to become our implementation partners. We don't want to rebuild a consulting and implementation business. We want to license our differentiating software, focus on that functionality, maybe consider other opportunities in vertical spaces or whatever. But we don't need to reinvent the wheel of, target operating model implementations. Consultancies, software companies, and other consultancies do that all day long. And they're happy to partner with us because every time we sell the business, they get business, and they get the kind of repeat business of we've done this on that ledger. How can we do this? How can we build out that? So it works, both ways. And so there's another, collaboration. Also, I found as an entrepreneur, and I'd tell this to anybody that's thinking of going into that, is that all the other entrepreneurs, it's rare that you're actually meeting your competition. They've got an idea in a different industry, or they've got an idea in a different aspect of what you're doing. So there's a lot of support, because everyone sort of kind of knows the boat we're in. So having that team of peers is also a great, sense of I'm not completely crazy, or I've got some good advice because they've been through if not the exact same challenge, a similar one. So there's again, you've got to think of your team. The most important one is your family. Because they're your security and your moral support and your sounding board when you're really frustrated.
Yes, I was just about to say, like, they're there whenever. I was about to say they're there whenever, like, you're at your worst, like you're mad and all that. They see you at all of your best, your worst. They see you through it all. So it's always good to keep your family happy too. But let's fast forward and look at what's to come next. So where do you see your business in the next 3 to 5 years?
Hopefully deploying multiple copies of our software to all these big institutions. I think that's our plan is to build, I really, like I said, my career has been around making the industry certainly more efficient, certainly more affordable, and more accessible, and importantly, intuitive. Like if we do our job, they're going to find better and different products and services and not necessarily know why it was made possible. In the same way, just computers in general made processing faster and accessible and cheaper. Commissions on brokerage trades have come down. Why? Because the technology's made the thing more efficient. Now imagine the next order of magnitude of efficiency, but more importantly, the possibilities. So my hope is that we're leading the charge. People are deriving the benefits, and maybe some techie geeks know what we've done, but we'll be just running in the background, providing the infrastructure for a lot of people to do wonderful things.
Yeah, I would love to see that happen for you guys. So as we wrap up, I do have a few rapid fire questions for you. Are you ready?
Yes.
Awesome. Okay. So what is the key to success for you?
Pretty rapid fire now. A positive attitude, and realistic and pragmatic goals.
I love that. And you definitely have a positive attitude. I have felt it this whole time. So what is one piece of advice for other business owners that you would like to give?
Understand your real opportunity, in terms of both the clients that you're going after and know that it's going to, land, which again, I think we missed to a certain extent, but we're playing catch up. And then the other thing is you've got to focus on your team. What I'd suggested, your immediate team, the collaborators, the support people, your family. You've got to know what how your team is constructed, and how each part of them helps.
I like that. Okay, and then this one is a kind of fun question. So if you had a little bit of magic dust and you could choose to put it on one spot in your business and sprinkle it there, where would that be?
Completed sales.
Completed
So yeah. So all our clients, like, get the proposal, let's sign the dotted line, let's get going. You've got a lot of success ahead of you. The sooner it arrives, the better for all of us.
Yeah, not really, because it is like I feel like a lot of people they're like it's unknown to them, so they're scared or don't want to risk anything.
No,
So I get it.
when you're dealing with this new technology, there's a risk associated with implementing it. There's a risk associated with, do you really understand what it's doing? And people are saying, I'm prepared to, any business is saying, I'm doing this because I can increase the sales of my current products, or I can increase sales in new products, or I can cut costs, or I can do stuff with it. So they've got to believe it. And I was saying, when I was sort of saying about the dust on closing sales, it's really like, can you come to a decision quickly, and can you recognize the benefits, and then, justify the go? But it's one thing to resell a current product or a new product, but a new form of technology, it does. So we're completely respectful of the decision process, but it's tough going through the decision and prioritization.
Yeah, no, I totally get it, because I feel like people here, especially here in Texas, it's like they are very they're not quick to decision making. Like they're kind of slow. Especially with driving. I've really noticed it with driving. I don't know, they do stuff very last minute here.
Yeah.
It's a little crazy.
They're also we also understand they're running a business. So like we're one of their 101 priorities. We represent the future, but they've got the past, the present, and other future things going on at the same time. And so that's but that's what I say, you just have to.
Right. It's like, I understand. Yeah.
Yeah.
Right. Well, before we get to the final question of the day, would you please share with our audience how they can follow you and learn more and contact you?
Sure. So I am Paul F. Dowding. It's easier to find on LinkedIn. That's the best way to reach me. And like I said, if you send me a message, tell me why you want to talk to me. Not just say, hey, it's cool. Let's connect. And if you want to look up L4S Corp.com, you can see our platform Tapestry X, also tapestryx.com. That's our website, and it's got all the information you need. And we've also, if you're on YouTube, it's a little bit more trickier, but you can look up the Blockheads Thoughts Distributed. So think of distributed ledger technology, the Blockheads Thoughts Distributed. It's our YouTube channel with all the videos that we've produced, which some of it's explaining blockchain, some of it's saying the limitations, some of it's industry appearances, and some of it's a few funny videos as well. So.
Awesome. Well, now we have come to that final question of the day, and it is, what is most inspiring to you today?
I think it's, I mean, I've always had a sort of academic interest in, in math, in uncertainty and whatever. And I just think we're at this interesting phase with technology. So I find it, if I can twist your question, I find it inspiring because there's more and more possibilities, especially with the advent of AI and other things. But there's also limitations, and it comes back to understanding, as I go back to the fundamentals. If you've got that, then you know both the potential but the limitation. And often the hype masters come in with all the potential. If I had $1 for every report that said in 5 or 10 years time we're going to be at 20x, and suddenly I look back 5 years ago, wasn't 2025 everything was supposed to happen, now it's 2030. It's amazing. But so it's really like to be able to filter that. But I'm inspired by the ever increasing potential of technology, and that we're lucky to be in this period in time. I mean, obviously there may be someone who's even lucky 100 years from now, but certainly what we've got access to in terms of communication and what you can do is incredible. And I really, I mean, it's a little bit hyped to say there's a fourth industrial revolution, but I certainly, in terms of connectivity, communication, and transacting, if that linkage is made to break down the barriers, like I said, no one could, very few could imagine all the possibilities of the internet. And I don't think the possibilities of distributed ledgers and AI and all the new possibilities, it's going to be interesting.
No, really, because whenever I was younger, I still had dial-up internet. So I would have never thought that it would be what it is today, or that we would have phones with apps on it. I would have never thought that. So it is really crazy to see how technology has just advanced so fast.
Yeah.
Well, this has been a great conversation. I really did enjoy hearing your story. So thank you, of course, for sharing. And
Thank
then
you,
also,
Joe.
of course. And of course, I encourage all of you who are watching to save the show and come back and watch it again, because Paul really did have some great insights for business. Also, do not forget to like and subscribe to our channel so that you can get notifications every time a new conversation drops, just like this one. And thank you to everyone who joined us today. A special thank you to you, Paul, again, for being here with us today. We really appreciate it.
No, it's great. I enjoyed it thoroughly. Thank you.